Okay, so when I talked of chart pattern, I meant let me show you samples, and there are patterns good moves in. There is this particular chart pattern. There's difference between chart pattern and candlestick patterns. Candlestick patterns can be like this doji, bullish engulfing pattern. Those ones are normal candlesticks pattern. But when you talk of chart pattern, it's something like flag, um, symmetrical triangle, what else? Head and shoulder, all those different chart patterns, you understand? Those ones are like,
Double top.
yes, double top, like the M and pattern. Yes, exactly. So, but when you talk of candles, like all those doji, monitor, different stars, those ones that happens because so basically there's noise from your end, just mute so we have a smooth class here. Okay. So on good, I look specifically for all these things here, these four confluences here. So we did the introduction, we talked more on it, and today I also showed you the patterns that do work in Go, like the way formats Go moves in here. You see these patterns here, and you see this is in an uptrend. I will still also be showing you what this looks like on a real-time chart. The thing is that these people do complicate Go. I will keep saying it so that when it seems as if you don't know what you are doing, you will still remember this particular word. The reason why people look good as if it's that difficult to trade is because they use one approach when going to trade Go. Like let's say for instance, you have a particular strategy that you use on a trending market or on a consolidating market, because the market moves in three phases: either it's trending up or down, or it's ranging. Those are the three phases here. So once you use one approach or one strategy or one mentality, or how will I put it, a particular, let me just say an approach. If you use one approach when going to trade growth, it will really mess up with you, because a time will come when it seems as if that strategy is not working. Not that the strategy isn't working, it's just that the market has changed from that particular phase. Because good, what I've understand with good, that's why you see I did a book on it. What I've come to understand with good is that it moves in different phases per season. There's a season where it's a particular kind of strategy won't really work on it. So what you should do, that's why you see people say, some traders say flexibility is really key, because there are some, even in other pays, there are some seasons where that strategy starts shifting a little bit. You understand? Let's say you were expecting your double top that used to happen will always be something like, how will I put it, like let's say like this particular pattern. And there's a season where this double top won't just happen. It will happen like 4 times before it drop. You understand? So markets do changes. That's why you see people, traders keep saying go back test, go back test. You understand? So as to be able to be flexible, you understand, with what the market is doing at that period of time. So what I do in gold here, I try as much as possible. I've tried as much as possible to create different kinds of strategy I use on a different kind of market condition. Let me put it that way. On a different kind of market. Not that the strategies are different strategy. Like let's say I'm using smart money concept in here. I'm using institutional traders concept. I'm using retail traders strategy in this part. No, it's the same strategy, but how will I put it? Just changing things in different kinds of market conditions. Because the way I trade it uptrend is not the way I will be trading a consolidating market. That's what you need to understand. The way you trade a downtrend is not the way you will trade, because the waves are different. You won't just see market just moving. If it's trending, it won't just be moving like this. Very easy for you to see this break and retest here, or you can say previous resistance turn support in an uptrend. Yes, this pattern works very fine, but at the same time, this is still an uptrend here, this particular one here. But now you see what happened, difference. Please, if there is noise from your end, you can mute. So you see the difference here. It's still the same uptrend. Please, if your mic is on, please mute. So it's still an uptrend here, but you see what happened. Now it broke and retest, created a double bottom at this point here. And like I said from our previous class, I don't know if mic is on. Let me mute everybody. If there is noise from your end, please mute. I don't know, I'm having an issue muting you from my end there. Oh, this noise is really distracting the class. It seems like I'll remove the person and maybe you join later on. I don't know what to do because I'm trying to mute there and it's not being connected. Show me. Here's the name I'm seeing. You please mute your audio. I'll have no choice to remove because it's really disturbing you. Thank you. So this is also an option, but you see what happened. The market came here to create double bottom before pushing. And when on our last video, Wednesday class, our last Wednesday class, I told you about this pattern. So this one too happens on gold, yeah. All these patterns happen on gold. So what you should do is work your eyes to understanding this pattern when it's happening on gold, and you will really be very successful. I can guarantee this because I've used this strategy. I've used it like I took time to study, and I understand that good markets do repeat all these things, but the thing is that people stick to strategy without understanding the way format moves in. I don't know, the noise is repeating itself again. So I will still lay more emphasis on this thing again, these patterns again. I will still lay more emphasis again because it's very important for everyone to understand this so as to be not that when you are seeing it in the market, you'll be like, what is happening? You understand? I just want a situation where everyone here will have one mentality. If this thing is happening in the market, you already know what is happening. If it means this key level, like all these boxes I draw is the F and R, I also call them key levels or zones. So if it means this one, you know where it's coming from. You understand? So I will still explain more again in this video before we go dive into the chart here. So in an uptrend, the market doesn't just move straight up. Yeah, you should know it moves in waves. That's how I can put it as simple as possible. It moves in waves. Like you can see how it's like looks like a wave here. So it's like a zigzag stuff like that. So it moves in waves. The market doesn't just move straight like a line directly. It moves, do some retracements, impulsive move to the upside. That's in an uptrend, a little retracement or pullback, whichever way you call it here. So that's how we like those retracements are mainly how will I put it, the market creating more entries for those that weren't able to catch that sniper entry or weren't able to catch it on time, you understand? So if you weren't able to, you were not how will I put it, early, or you missed the first entry, that pullback, that retracement is where you could get in again to cash to ride that buy, you understand, in an uptrend or sell in a downtrend. So gold moves in that form. Whenever it's creates a high in an uptrend and it breaks that high, there is a high tendency that the market is going to drop back to that point. I can go back from 19 something and backtest this strategy from to this chart. Like it happens every time. If you see in an uptrend, just that you might not how will I put it? Let's say this is, you see this particular pattern here, this is a downtrend now. When the market came down, it created a low here. This is the lowest point. It moved up and we waited for it to do what, and once it break that point, it went back to do what, retest that point. So now remember, this is a 1 hour time frame. So this particular move now is very strong, because if you should go to the 15 minutes to take trade, this short stuff you are seeing here will be a very long move, you understand, and you can capitalize from it. And it won't just move straight like this in the 15 minutes time frame. It will also, because since since I know that this thing is going down, I know the direction is going to, so I can just go to the 15 minutes as it's going down, retrace, because this move that you are seeing that is straight. In the 15 minutes, it's not straight. It will be like that, the same wave format, you understand, going to the downside. All these things you come to understand as time goes on. So I'll just go to the 15 minutes, enter my trade. Let me even look, check the 15 minutes and see what it looks like here. So you understand what I mean too. Now this is it on the 15 minutes. That particular trade here. You see a small doji candle, it created a chart pattern on the 15 minutes before we entered. Now you see how it looks like on the 15 minutes. It came down, went up, came down, you understand. Then as it started changing, you see what happened too. So the market now, since we saw that break and retest from the 1 hour time frame, I did what? I jumped back down to the 15 minute to enter the trade. And at the same time, if you should go to that 1 hour, remember when the market broke this box, this particular box, our prediction was what? That it will go back to retest, right? Now, since we know that it's going back to retest, what should we look for? That same wave format, you understand, in a small time frame. Now, you see what happened? It created a new high, came down, broke that new high. What did I expect? I waited for it to go do what? Retest at that new high. You can see it here. It came back and did what? It entered that box again. That was our entry. So this was it's as small it is. It is a 1:5 risk to reward, 5.8, which means if I'm risking 100, yeah, I'm making $580 of this particular small move. So what you see, the same strategy. So it works very well on gold. And at the same time, let me show you something else. Now, this is the recent high it created. Now, when it broke it, I wait for what? The market to come down again to that box. You see what happened? It came back to that box. That's our entry. 1:10 risk to reward. And see what happened. It went straight to our TP. And when we hit this zone is, all these things are from a bigger time frame. Why it looks like I draw the zone almost on everywhere is just that I've been trading for a long time. So some of these zones are old zones, you understand? So once you hit here, I say, okay, what I'm expecting is that this market should drop from here to come back and retest this previous high here. It might look scattered, but just bear with me as time goes on, you understand? So I say the market will come back to retest it. So what should I do? Should I scalp that sell, that small sell down? Because it might take time before this thing happens, this drop. So I say, okay, maybe I should just scalp that sell. And what happened? When the market came down, see the recent low here. Let me put this box so that it won't distract. You see the recent low it's created. Once you break it, it went back to retest. So this one, I missed it. I missed the sell here. But this is another low again it created. You understand? And once it broke it again, it went back up again to retest it again. You see? So you might be seeing this thing and you don't understand what the market is doing because it might look new to you because you don't understand what you might just think it's consolidating, but no, it's doing its thing. It broke it again, went back to retest that previous low. That's when I entered because this one I was awake. I entered for the sell. And what happened again? It created a new low again at this point here again. For those that missed this point and as it went back to retest, they entered for that sell to this box because this is where we know that the market shouldn't go beyond it because it's the recent high from a bigger time frame. This is also like a break and retest from a bigger time frame. So that, you know, the ones that comes from a bigger time frame is always long. That's why you see the risk reward here is 1:10. So if you are risking $100 here, you are making $1,000. So that's majorly how this market will. That is sample of this particular one I'm talking of. This stuff here. This particular break and retest. So that is one of the pattern that good markets that is one of the common one that happens on gold. Now this particular one also happens on gold. Let me see if I can show you an example. Let me explain before showing an example on the charts. So what you should do is now take this pattern, carry cycle, because you just don't want to use one how will I put it? You don't just want to use one confluences when trading because this might just be like using chart patterns and this F&R, frequency and recency, like so you wouldn't just want to use it. What you will do now is those entry points you might see like are just normal levels, those key zones. If you should plot your psychological levels there, you will see that it corresponds with psychological level. So once you add psychological levels now, it's matches with it, that is, it has given you extra confluences. If you should draw your trend line now from this point now, you see that those points that the market is coming to retest, there is trend line there, it adds to your confluences. So all those kind of trades are like killer trade. That's why it works very well on gold. So now moving to the second pattern now, this is still an uptrend. But first of all, to understand how this thing works, you must first know the direction of the market. That's just it, which I will still talk more on as time goes on. You must first understand the direction of the market because you won't just see an option and start looking for a sell, a break and retest to the downside for a sell. You might just end up losing. That's where people start getting it wrong, you understand? So since I know it's an uptrend, yeah, I see this previous high now. So the market, I say, I shouldn't scalp this sell because it's not worth it. In an uptrend, we should look more for a buy, yeah? Cool. But at the same time, if I'm a scalper, then I should know how to trade this small move to the downside, yeah, which I will show everybody because I believe it's not everybody that is going to be a trader. Some people are successful being a swing trader, some people are successful being a scalper, and some are still successful being a day trader, mechanical trader, depending on the type, you understand? So as I see this break, I know very well that this market is supposed to come back and retest that level. And if it should not come back to retest that level, then it's better I miss the trade than losing off. You understand? Because that's just it. But some people keep blaming that I have missed this trade, I've missed this trade. What if you enter at this point and the market still came down to test that level? That is the one you even regret more, because it really affects your psychology in a sense that your stop loss might be somewhere there. It will just come and hit that box where you predicted it before, but due to impatience, you entered off early, you understand, and it hits you. That's one of the complaints people do have, entering trades very early. And as a trader, we need to develop this patience skill as a whole. You need to be very patient with the market, because it's either the market plays out as you predicted than you allowing the market to control you specifically. So what we expected was that it will come back here to retest for us to buy. So if you had entered for a buy here, let me show you an example to buy at this point. Remember, our stop loss is always below the box, a little pips below the box, and our TP is always above the previous high again, because we believe that it will break it again, come back and retest there and go up and go to the upside. So this is what we predicted now. So to enter for a buy. Once the market hits, like if the market goes up and hit this point and refuses to break, just know that it's coming back. If you start retracing back, know that it's coming back to that zone where you entered again. You understand? And once it bounces there again, if your maximum risk for a day was to risk maybe 1% or 2%. If you have reached 1% here, once it comes back to this point again, this is the pattern that works on gold. I'm not talking of other pairs, but this strategy, this break and retest, it happens on all pairs. You can use it to trade all kinds of currencies. If you are very disciplined very well to understand, you can use it to trade. But first of all, you need to master the skill first, this particular strategy. So once it comes to that second point, now the remaining percentage I was fixing, I would fix it off that point again. You understand? Or I might just take as my, because this point here is our first TP on all trades. So if it should come to this point again, there is a very high tendency, the way you predicted that it will come to this point, that thing that gave you that assurance, there is a very high assurance that the second going up is going to break you aggressively. This pattern works very madly on gold. It works badly. And I can show you plenty of trades that this pattern happens. So only the market will only change if it starts breaking the low. That's when you know that the trend is changing. Like this previous low, it breaks it, comes here, break this low, then you should start looking for a sell. You understand? But even if it hits you out here, start changing, it will like break here, come back to retest for, you understand? Fine. You remember you were risking 1%, only one trade again, because this strategy gives you much risk to reward, and it helps you cash more sniper entries than just normal trades, you understand? So even if it's hit you out with 1%, the next trade 1:4, you recover your losses, because I hardly see trade that is 1:2 except I want to scalp. You understand? So this strategy gives you more risk to reward, and having an edge in the market, you need to have more risk to reward trades. You understand? So let me see if I can see a trade that I entered using this pattern here. Let's see. Okay, seems like I've seen one here. What time frame is this? 1 hour time frame. Remember, the break and retest is the main strategy that happens. Now, this is it. Let's say, yeah. So when this market came down, it's going to create a new high. So what was our prediction? It must break this one because it's a downtrend, yeah. It must break this particular recent high low it created here and retest before going to the downside, right? But what happened? The market didn't break it. It went back up to that box. Let's say we had entered for a sell. Let's say we had entered for a sell at this point here. And remember, our TP should be at levels. So the next zone there from this point here. So what did the market do? It came up, came down, did what? Went back to the entry points. Remember that pattern I told you. So if you had not exited or you took your profits here, then the second entry should have been at this point here. And I said what there's a high tendency that it will do what, break that high aggressively, and you see the kind of candlestick that it should. It's going to break it aggressively. That's how good move. Let me still see if I will see other points where it did exactly the same thing. So you seeing all this, you should know what the market is going to do next. Okay, let me see. It happened here again too, similar something. So what you should be doing is, like, if possible, carry those yes, the book is there, all the strategy, these patterns are there, study it, time with that number, just work your, I go to the chart, look for that particular pattern to see if you would understand it. So when the market changed, there was a trend line here. So when it changed, it came down, it created a low, because overall it's a downtrend, it created a low. So we were expecting, like, let me say, we were expecting the market to break up these points, you understand? Break up this point and come back, retest here, then fall. But what happened? It went back up again to create like the same double top before. You see what happened again? You see the drop again. This time around, it moved very badly to the downside. This one said it's not even that clear like that. I shouldn't be even using this one as an example. Let's see. You see the same thing, break, went up, came down, retest that level before going up. So it works very well. So what I will give, like the assignments I will even give today, because I don't want to be balking everyone here on this on good, especially because it can be really how will I put it, really confusing, especially if I should bulk you with everything. The ebook is with you, right? Just go to where we have, let me see the ebook if I can pull it out here. You go to where we talked on F and R, yes, zones, where we talked on zones. Go to that particular, because I believe everyone have the book, if I'm not mistaken. If you don't have the book, just let me know on the group and it will be sent to you. Just go to where we have F and R zones, where we talked on zones, and start going through the understanding market structures and patterns, and try as much as possible, because I did the same thing. I showed how it looks in an uptrend and downtrend, and try to understand all these wave formats, all these wave patterns. Like, try go through it and go to your chart to see if you would see this thing happening. If you can master this particular thing, I bet you it will be very hard for you to keep losing in a trade. You understand? To keep losing, especially when trading good. This is the main reason why people fail. They just go with one approach. They just want the market to be creating this kind of pattern forever. No, it's going to do this, but it still changes. You see that pattern here. It means where it's supposed to retest from. Let's say you entered at this point for a buy because it's still an uptrend, because it hasn't started breaking all those lows before you know it's changing to a downtrend. You entered 1% here, it's hit you out. What you should do is you strategize, entered in the next zone, because you know this strategy just as a whole tells you where the market is going next. It tells you where the market is stopping. So if I had longed from these points, as the market is coming back, I know that it shouldn't go beyond these points. You understand? As it came here, started retracing, I move my stop loss to this point, enter again. It breaks it again. I know it shouldn't go beyond this point. So it already gives you what's like a clue to what the market is doing. You understand? So as to know how to re-strategize and enter more positions. Yeah. So even if you are trading $10, $5, you are risking everything, and they say not enough balance, according to the trader for sometimes. As it goes up, your profit again come down, you use your profit to enter more positions. So that's just majorly how it works. So what I would do is go to the book and go to the sections in Zoom. Try as much as possible to study it. Just work your eyes to see this thing happens. Then because it's not complicated, but just try to understand how it works. Let's just leave other conferences for now, but try to understand this wave format. And if you should understand it, that is just, or you don't even need too much stuff on your chart. If you can see, I hardly even draw trend lines. Yes, trend line is very important. I hardly even draw, because if I should even put it, like if I should see the structure of the market, if I should add other conferences, it works like since last week to this week, it's all trades has been in our favor. It hardly hit our stop loss. Yeah. So this this has been a trade I've been waiting for a long time, and the market is still doing its thing. But at the same time, we're still waiting. So that's just it on this structure. So that's the assignment I'm giving everyone. Go back to that book. Don't just keep it for. I saw someone has started printing the hard copy already, and I'm really happy seeing the guy doing it because it shows a serious. Like to me, the guy is very serious. Yeah, for him to go print the hard copy, he believes that okay, reading on PDFs online might not be his thing. You understand? It might make him sleep off. You understand that kind of stuff. So he went ahead to print the hard copy. So you should do same if possible. If you know that reading soft copy might make you feel sleepy or it's not convenient, but you just go print the hard copy, or yeah, print the hard copy. I'm even working on doing the main hard copy like a normal ebook, unlike the other one, the normal book, the way normal books are, which I'll be launching very soon. So which I will let everyone know. So just try to study this pattern, and from our next class again, which will be Wednesday. Apart from that, we can still have a class this week if possible, because I want everyone to understand this pattern, like understand it very, very well. You get. So if you have a question, just you can ask. If you have a question, I can see someone is raising his hand already. So let's ask. You can ask a question if you have. Okay, someone is asking if can this work on higher time frame like the daily, weekly, and 4 hours time frame. I'm even happy with this trade. Like this strategy, if you want to enjoy it very well, you can enjoy. You would benefit it if you're a swing traders. Because you know why swing traders seems like as if they are more profitable than day traders is because they don't force the market. Like the market gives them exactly what they want. You understand? Day traders, we do look for trade. We just try as much as possible to see trade every day. Sometimes we tend to over trade, and sometimes we force the market to give us a setup. You understand? But swing traders, they are more patient. Like you don't even need to even analyze too much. You understand? So it works very well on bigger time frame. I made a video then on why you should even swing trade more, but at the same time, nobody's patient to swing trade because when it comes to prop firm, but at the same time, there is how you can still swing trade and still pass your prop firm. This is a 4 hour time frame and it still works perfectly. It still works perfectly. If you should, let me even see daily time frame, it's everything works perfectly on all time frame. Show you something. You see this down move, yeah? Previous, you see what happened when it came previously, break, change to support, broke that point. It missed to hit here. What did I tell you? Go wait for it at the second zone. You see what happened. It hit there, your entry. So you see what happened. First entry, it means so if you had reached 1%, you lose here. You enter here, you recover all your percent. You remember TP shouldn't be beyond these points. From that pattern I showed you, and you will understand it once you start reading that book, you should know where to put your TP. Normally in this pattern, your TP shouldn't be beyond this point. So it happens very well on all time frame. At this point, see again, previous low, yeah. It will look funny and easy, but at the same time, just walk your eyes. See, this is the recent low created, went up, break it. What should you do? Wait for that point again. You see a doji candle giving you an entry, you enter from that point, roll it again to the downside. It broke that point again. So that is just how it works. Remember, it's recent low and recent high, not the older one. You understand? The recent one. That's why this is the recent, apart from this low, this is the recent one here. So that is just it. It works this is the daily time frame showing you that it works on all time frame. This is an uptrend. You should even analyze it very well. You see that it works very well on all time frame. So I don't know if you have any other question. Okay, someone is asking, can this strategy work on GBP USD? Yes, although I use it majorly on gold, but it works on GBP USD because I have someone trading this particular strategy. You know, break and retest happens on all pairs. Normally, strategies, the market doesn't just move straight to the upside. It moves, do retracement to the downside, impulsive move to the up. So it works, but it really happens the way it happens on gold, but it still works on other pairs because I know someone trading it on using it to trade indices, using it to trade other currency pairs, even using it to trade cryptos like BTC, USD. in Forex too. So it works, even if we should go to GPUSD, which I will also show you as time goes on, it works perfectly on other pairs. But the major pay where I see it happen most is here on gold. Can you analyze the recent price action? I don't get this question. Can you analyze the recent price action? I don't really get that question. Okay. I don't know if you have any other questions. Time is past spent already. So what you should do more now is go study these patterns and good. I will keep on asking everyone on the group, go study this pattern on the ebook and try as much as possible to master it, you understand? So that's it, guys, for today's class. Thanks for coming. I'll keep people updated on the group. I really appreciate it.